Hey guys, I want to show you something super interesting today that's happening in the currency markets, since the stock indexes are kind of boring and really boring. So what I've got up here is a chart of the US dollar futures, pretty closely approximates the US dollar. And so what we have is a series of lower highs and lower lows. So we start off by going from here to here, then we go back up to here, down from here, back up and down, and so on and so forth. Now, where is this downtrend over? If we look in context at every single bar, if we look at this previous leg down, this uptrend was this counter trend up move was choppy, so it still looks like a downtrend. At this point here, at this bar, we can't say that we're in an uptrend or a trading range. The only thing that makes sense is being in a downtrend, right? And it continues to go down. So as long as this market is making a series of higher highs and lower highs and lower lows, like this one is, we're all good. But at some point, we notice that it's totally inconsistent with our thesis. So if we're looking at this as the thesis, we were in a downtrend. If we're still in a downtrend, what should happen is about here, we should continue to go and fall off the plate and make a new leg down, right? Even if that new leg is a bit shorter. But at this bar here, this little green bar, that's kind of inconsistent with that idea of moving down. And so what this whole complex of bars here, I would consider this a retest of the lows, because what this market is trying to do is it's gone up, it's made a lower high, which is still consistent with a downtrend, but it's tried to go down and failed. It has retested and that test has failed. At this point here, with this big bar, that doesn't look like any downtrend I've ever fucking seen, right? So at this point, we have two and only two options. Option number one is we're in a trading range, and we're going to go somewhere between the highs of the trading range here and the lows of the trading range there. Now, a trading range is always the highest probability outcome. We can, because we're humans and we've got all these biases, we condition ourselves to look for trends because that's why we think we make the big money. But most of the time we're in a trading range. In fact, if you look at the numbers, over 80% of the time we're in a trading range. So if there's any doubt at all as to whether we're in a trend or a trading range, you really want to err on the side of, I think it's a trading range. Because I can tell you now for sure that nearly everyone here is betting on a new bull trend. Right? Everyone's betting on a new bull trend. Just like right here, everyone was betting on a new bear trend. Now, that new bull trend may or may not happen. So what we have here is a series, exactly the same thing in reverse. So we have a series of higher highs and higher lows, which I'll just mark up for you now. All right, so check this out. I've marked up a series of higher highs and lower lows, and a higher high and a lower low. Now, if this is an uptrend, this should go straight up to the sky like this and just keep going and going and going. But if that doesn't happen, this point here is the critical time that we should pay attention. And that's why I'm bringing it up for you today, because we've gone up, we've retraced part of the way, and we've painted this really ugly looking shooting star candle. So what this shooting star candle is a failed attempt to drive the market up. So if the market was going to go up and make a fresh high thing like this, it really shouldn't be doing this. This one bar here really puts me on notice that something is rotten in Denmark. So now, what this means is if we fall substantially here, we're probably in a trading range, and at that point, the odds are probably about 60% that we're going to go down and test the bottom of that trading range. If we're still in a trading if we're in an uptrend, sorry, we're probably going to break out, close above this high, and keep going. So what we have is what I call an inflection point on the tape. So nobody really knows the future. I don't, you don't. But what we have is the real-time odds of all these various probabilities. The odds of it being a new uptrend, the odds of it being a continuation to the downtrend, the odds of it being a choppy trading range. Now, if we get any downside here, the odds are very strong that we're in a trading range. Now, do we have acceptable risk reward? The bottom of the trading range is a fair way away, so we have a decent trade. We have a 60% odds of at least a 2-to-1 risk reward ratio, and those are betting odds. So what we're trying to do as traders is not to predict the future, but we're trying to make a series of rational bets, where if we play those bets out 1,000 times in a row, at the end of those 1,000 times, we're going to make money. All right, hope that helps.